Welcome to the Strategy of the Week for the 30th August, 2013. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be providing your strategy presentation this evening. Last week, we witnessed the power and ease of making money trading top VST stocks in rising markets. We coupled the strength of VST with our RT combo timing signal and our strategy called Easy Money. I want to start our presentation this week by reviewing the equity curve from our presentation last week. Let's move into the program. From the home page, I'll come up to the tabs on top and click Backtester. And here we have our backtest results from running the top VST stocks search using the RT Kicker combo timing system. We had a gain of 53.5%, which annualized to 32%, with a 6.5% drawdown. The trading plan used a stop loss of VST score below 1, which gave the stock some room to move. During the green lights of the RT Kicker combo system, we were buying and replacing stocks, but when we got the red lights, we went to cash. And we did this to protect our profits during down markets. And you can see that we have this nice stair-step pattern where every turn we get to a higher and higher high. Well, it occurred to me, what if instead of sitting around in cash, we put our assets back to work in that falling market? And so this week our strategy is titled Making Even More Easy Money. So while I have the bullish side of this portfolio laid out for me already, I need to choose a shorting strategy or a bearish strategy that I can use in the down markets. And the question is, well, where do you start? Well, I'd want to start with a bearish strategy that's working in the current market. And so we've demonstrated in the past that I might go into the Unisearch tool, sort by group, and run down to the search as short group and start running a series of quick tests to identify the best performing bearish strategy. But in this case, I went to the VectorVest views and looked at what we had done in the recent past for strategy presentations, looking for the bearish strategies. We did one here on the 9th of August titled Markham's Short Interest. And if I double click on that strategy, it takes me right to the strategy section from that week. I get a brief description of the strategy, and of course I can go watch it simply by clicking the hyperlink, which I did. And in this presentation we didn't present a back test, we did a series of quick tests introducing the strategy and talking about how the strategy works. It leaves me with a little more work in optimizing the performance with money management. But coming to the back tester then, first thing I want to do is just update last week's presentation to the current day. There are several ways to do that. I could go to the edit button and just change the dates, or I can come down to my toolbar on the bottom, and if I click the date calendar I can just include dates beyond that test date, and I did the research last night on the 29th. And I click run and I update it just that quickly to include the past week's action. My next step was to load up the short side of the campaign. Now, there's two ways to go about this. I could just add the bearish legs to the bullish legs and run the test in toto, but if I do that it'll run a little bit slower because I'm running a fairly long test here on both sides of the market. I opted instead to just make a copy and reverse the rules. So when I got to the up condition, the green lights, I'm going to go to cash, and when I get the red lights I'm going to sell short, and we'll need to sort alphabetically. And let's scroll down to the M's for Markham's short interest. And while I'm going to create a base run with no stop criteria, I do want some symmetry in that I'll do a 5-position portfolio as I did on the long side, automatically replacing. We stepped in on the long side, so we'll step in here. Because this trading plan generates several red signals in a row perhaps, then I'm only going to close the position that was opened in a different situation. We're going to invest the average portfolio value, odd lots, limit repurchases to 31 days, with a maximum percent of average volume of 2%. I just simply need to change the description here, and we'll call this Markham's base run. And click finish and run. And here's my base run, and some of the things I like to see right off the bat. While yes, I have some volatility in here, I do hit a succession of higher highs. We fell off a little bit in this most current turn, but we'll see if money management can improve that. I've got some good bones to work with here. My next task was to maximize the performance of just the short side of the portfolio, trying various stop combinations to improve performance. And we've demonstrated that process several times where we just strike a copy and systematically modify the stop loss settings to see our best performance. The results of that analysis pointed me toward a 10% trailing stop loss. And so now it's time to marry the two sides of the trading plan together. So going back to our long only strategy, I'm going to strike a copy. We need to make one change to the automation rules up, because now we will be playing the downside in the more settings section. We're going to say close any open position that was opened in a different situation. This setting will have us do now a stop and reverse approach, where we'll change from long to short versus hedging, which would let positions close out on their stops before being replaced. Put the automation rules down. We're going to sell short. And we're going to duplicate our settings from the test that we just finished. Mark them short interest. Stop criteria will be a trailing stop, 10%. More settings, we'll trade 5 positions. Automatically replace. We're going to step into the positions one at a time. Close any open position that was opened in a different situation. Average value odd lots. We're limiting our repurchases for 31 days. And we're doing 2% of volume. Again, all of that keeping symmetry with our long side. Not that you have to, but it's easier to remember and trade, I think, if you do. Our date range stays the same, and let's update the name of this to reflect that we're trading both sides of the market. And here are the results. Let's scroll down so that we can compare. Beginning first with our statistics line, we see that our percentage winners fell from 80 to 68%, but our gain rose from 54.25% to 72.25%. Our trading just about doubled. We increased our average annualized rate of return up 11 points up to 43.71, and our max drawdown also increased from 6.5% to almost 11%. Looking at the equity curve, we see this nice steady progression in the equity curve. Not a lot of volatility. Looks like our biggest pullback here in the early part of this year. But notice we turned those flat lines into increases in the portfolio. And that was the goal. Although we did pick up twice the trading activity to do that, of course, we also picked up a little bit more volatility, increasing that max drawdown. And so I might leave well enough alone right here. This is very nice performance. But I did want to try one other variation. Stepping in one at a time helps us manage risk. First of all, that when I get single reversals in a timing signal, I don't load up the portfolio with 5 or 10 positions and take the maximum loss on the whole portfolio in all positions. So it helps me manage that risk, but it also tends to lower returns because when the signal is a very good one, I get in later before I have a fully invested portfolio. So I want to run one more variation. Let's make a copy of this backtest. And what I'm going to do is change the automation rules so that instead of stepping in one at a time, one per day, on both the short and the long legs, we're going to jump in with all 5 positions. And it'll come down to our description, and we'll update this. I'm going to call it jump in as opposed to step in. And we'll click finish and run. And here are the results. If we start with the results table, we took another knock to our percentage winners, although 66 2/3 is not bad. Percentage gain went from 72 up to 83, almost 84. That's a 7-point increase on average annually. Our commission load's slightly higher because we're buying the maximum positions on every fresh signal. And our drawdown increased a point from 10%, from 10.85% to 11.81%. We had a 1-point increase in our maximum drawdown. If we look at the equity curve, we do see a little bit more volatility in the curve overall. Interesting, performance flattened out here for the past month or so. And notice that when we have those individual signals that were reversals, I loaded up the portfolio and sold off at a maximum loss. I loaded up the portfolio and sold off at a maximum loss. And so this result is fairly typical in that by jumping in, we see an increase in overall gain, but we also see an increase in volatility. And this is why we often recommend, if you're starting the campaign after the first signals have been generated, if you're starting in the middle of the run, you're often better off stepping in instead of jumping in, because you don't know when you're going to get that last green signal. But this is the power of the VectorVest tools that lets you do this kind of analysis so you can make these trade-offs on paper before you actually put money into the market. And depending on your investor temperament, I don't think any of us would be disappointed with the performance of any of these tests. It's simply a matter of identifying the one you'd feel comfortable trading. Now, before I go, if you'd like to recreate any of these results, I did include in the views today a PDF file that includes the settings for the first combination backtest, so you can recreate that on your own program at home. Also, in conducting these tests, I did use the auto tester, which is the tool that lets us automatically import these timing signals. If you don't have that but would like to try it, again, there's a link in the view so that you can get a free 2-week trial to try the auto tester to see how it improves your ability to do these tests quickly and easily. Also included in the views is a hyperlink to a webinar that we'll conduct at the end of this week, an open Q&A in support of this presentation. So I invite you to come back for that. Or until next week, have a great week.